Good morning, you're watching Market Cafe on ET Now with me, Soumit Sarkar, and my co-anchor Ankita Saxena. First up, let's go across to Ankita to understand what are the cues coming in from the US market.
Well, Soumit, the cues are exactly like the color of my dress. They're all in the red, the US markets in the red. Now, they fell yesterday after, the jobs data showed that the labor market is still strong despite the Federal Reserve's interest rate hikes to tame inflation. The private payrolls beat expectations and jobless claims came in below expectations. These are all our indicators that the labor market remains very resilient despite Fed's efforts to tame inflation. Now, the ADP private payrolls report showed that the employees added 235,000 jobs in December, which was well above the economist estimates of 2 lakh jobs. Now, wages also increased more than anticipated, which is another sign that the labor market remains pretty hot. Now, later in the morning, weekly jobless claims also came in below expectations and showed a drop in continuing claims. Now, on back of this, the Dow Jones Industrial Average fell 340 points or was down 1%. The S&P 500 shed 1% and the Nasdaq Composite also slipped almost 1.5% in trade. Now, the interesting thing to note is that Bed Bath & Beyond shed a good 30% after saying it's short on cash and it is considering bankruptcy. And the crypto-friendly bank Silvergate Capital plummeted 42% after it disclosed major customer withdrawals. So these two stocks saw a major sell-off in the US markets yesterday. In the European markets also dipped after the US job data that came out yesterday. European stock 600 closed in 0.1% lower provisionally. DAX was down 0.3% and CSE was also down 0.2% in trade. So that was the roundup of the US and the European markets. Soumit, take us through what is crude looking like.
Well, in the commodity side, if you see Brent crude is currently trading up around by 1%, and that's largely on the back of a volatile trade that we had seen in the US market, and also there was a US pipeline shutdown and lower inventories in the US market that aided crude prices to move higher. When it comes to the Singapore gross refining margin, they also edged higher by around $1 per barrel, and this was largely on the back of gains coming in for the middle distillate products that we had seen in trade. When it comes to gas prices in Europe, the gas prices were higher compared to yesterday's low, and they're currently around $21.7 per MMBTU mark. However, in the US market, if you see, the gas prices slumped again, and now they're trading to their one-year lows of around $3.7 per MMBTU. In yesterday's trade, we had seen a fall of close to 10%, and this was largely on the back of lower than expected fall in the inventories and milder weather forecast when it comes to the month of January 2023. And lastly, in the Asian market, if you see the Japan-Korea market, that remained largely stable around the $28 to $29 per MMBTU mark. Moving on to gold prices slipped more than 1% in trade, but this is after the prices had touched the 7-month high in the previous session, and this is largely in the back of tighter than expected US labor market, which also boosted the expectations of higher interest rate hikes going forward. Now, do remember that dollar index also strengthened in trade while yields were also rising, and these two factors also weighed on the gold prices in yesterday's trade.
Right, and a couple of events to watch out for in today's session. We have Precision Wires and Sudden Credit Care that will be holding their board meeting to consider a fundraise. Inox Green Energy will also be holding a board meeting to consider modification of the scheduled redemption and interest. We also have Uniparts India's lock-in period, which is going to be ending today. So these are the events that you need to watch out for in today's session.
Well, moving on to some global news, St. Louis Federal Reserve leader James Bullard expressed optimism that the new year could finally bring relief from inflation. He also said the risk of US recession has fallen in recent weeks and the labor market's performance remains strong. Now, Bullard held a voting role on the FOMC during 2022.
And in more details, the job market closed out 2022 on a high note, with companies adding far more positions than expected in December. Private payrolls rose by 235,000 for the month. Now, there are still about 1.7 job openings for every available worker. ADP reported that annual pay across all categories rose 7.3% from a year ago.
Well, shares of Silvergate Capital sank as much as 43% in trade after results showed massive customer withdrawals. Now, total deposits from digital asset customers declined by around 3.8 billion US dollars from 11.9 billion US dollars. Now, the withdrawals came as crypto exchange FTX, a Silvergate customer, collapsed in scandal. Silvergate said there was a crisis of confidence across the ecosystem.
Genesis Trading, the crypto lending arm of Barry Silbert's digital currency group, has cut headcount by 30%. The lender faces increasing pressure from creditors and the looming threat of bankruptcy. The latest workforce reduction comes a day after the company's interim CEO told the clients that Genesis needed more time to solve its financial crisis.
Well, Japan's real wages fell at the fastest rate in over 8 years in November as a result of higher inflation. Now, nominal pay growth also slowed despite rising for the 11th straight month. Sluggish wage recovery remains a pressing issue for Japan, and a surging life cost weighs on the consumer spending in the world's third largest economy.
And Japan wants the group of 7 advanced economies to take a coordinated approach this year aimed at preventing the economic coercion that China has applied to some of its trading partners. Yasuto Sri Nishimura, Japan's Minister of Economy and Trade, said this would be a major theme.
And US House Leader Kevin McCarthy lost an 11th vote for the House Speaker. This was his latest defeat in what has already become the longest Speaker balloting process since 1859. Ahead of the vote, 2 members of the bloc of 20 Republican holdouts opposing McCarthy's speakership formally nominated alternative candidates.
Well, is your air conditioner becoming more expensive this summer of 2023? Now, we ask this question as China's COVID cases have Indian manufacturers worried. Now, we spoke with Saurav Gupta of Dixon Technologies on what products will take the hit from supply chain disruptions and how the company is bracing for it. Let's take a look.
Consumer electronic, which is LED TV category, I think so there's significant dependency on China for import of critical components there, and I would think it will take time for India to get self-sufficient in these categories. Mobile definitely would happen slightly faster because clearly the mobile policy, the mobile production link incentive scheme of the government is clearly aimed towards making India as part of the global supply chains, creating a component ecosystem, making India as a manufacturing hub, and a lot of bigger global giants are committing larger investments in India. So they will also get the component guys also in India. So my sense is the value addition in mobile phones should increase. But yeah, as of now, to answer your question, the dependency in both mobiles as well as TV, it's quite high today. We have now stocked up our inventories for at least 2 months, and one has to wait and watch once the new year, once after the new year, what is the situation, whether people resume factory with full production, the workers in China come back, and also hopefully the COVID situation doesn't get worsened there.
Well, at Times Network, we are always looking to create investor awareness and make financial matters simple for our viewers. Now, keeping up with our values, we present the second season of Nivesh Ke Funde. On this edition, we take a deep dive into the world of index funds. Listen into it.
The pandemic has seen a number of Indians turn to the financial market to invest their wealth.
Yes, but many have wanted to follow a passive route of investing.
Absolutely. And they have been able to do so by investing in index mutual funds. But Aisha, how does one know if they are investing in an index fund or actively managed fund?
Well, it's quite simple. Index funds mimic a stock market index like the NSE Nifty 50 or the BSE Sensex. So your investments are only in the stocks that are part of the index.
And the investments are made in stocks replicating the same weightage that they have been in the index against which the funds are benchmarked. And since the fund manager just has to replicate the stock composition of the index, the expense ratio is quite low as compared to actively managed funds.
But Nikunj, while a low expense ratio is ideal, investors should also check the tracking error of the index fund before they invest in it.
Yes, a low tracking error shows that index funds returns relative to its benchmark do not vary much, which is good thing.
You know, Nikunj, another benefit of investing in index funds is that investors get access to diversification.
Right, since the index fund replicates the index, diversification is built into the system.
And if someone is bullish on the long-term prospects of the index, then an index fund is a very simple and easy route to stay invested towards that belief.
Investors can consider adding index funds to their portfolio, but only after consulting with their financial advisor.
That's all in this edition of Nivesh Ke Fande, where today we were talking about index funds. Stay tuned for more such investment insights.
Let's quickly move on to news coming in on the domestic front. Market regulator SEBI has allowed the central government to classify its stake in IDBI Bank as public after it undertakes the stake sale exercise. Now, SEBI has also mandated that the government's voting rights should not exceed 15% of the total voting rights of the bank. My colleague Ankur Mishra joins in with more details.
Yes, Securities and Exchange Board of India has allowed IDBI Bank and given permission for classifying government as a public after the stake sale is done. Remember, there was an application which was made by the bank on behalf of government and this was done to give the relaxation to the acquirer as well to meet the minimum public shareholding norms. Now, as per the permission granted, the new acquirer will have to meet the public shareholding norms, meaning to dilute the stake to 25% within the 1 year. And currently, the plan is to sell more than 30% of the stake by the government. And with the cap which it has obtained from SEBI, the public shareholding will come down to 20% and currently the retail shareholding is around 5%. So overall, it seems that the relaxation has come from Securities and Exchange Board of India well before the deadline for expression of interest, which is there on 7th of January.
Well, moving on, recently the Union government approved the National Green Hydrogen Mission. Now, this mission will make India a global hub for production, utilization and export of the green zero carbon energy. Now, to know more on what exactly is the Green Hydrogen Mission, ET Now's Prakash spoke with MNRE Secretary Bhupendra Bhalla. Listen into that conversation.
Under the mission, which has been approved by the Union Cabinet, we have provided for two kinds of incentives. One is incentive for electrolyzer manufacturing and one is for green hydrogen production. The total amount envisaged, which is approved by it was envisaged and approved by the cabinet, is 17,490 crore till 29-30 for these two kinds of incentive. And based on, we will formulate criteria on the basis of which we will invite, because we want companies or firms to, want to participate in this process. Plus, we want it to be competitive. कि भाई जिसको हम दें, they should be competitive when we are awarding the कि किसको देना है हमने. So we will be making guidelines. We will be formulating those guidelines through a consultative process, and then we will be inviting companies to participate.
So by when can we expect these guidelines to be announced?
Yeah, we are going to start immediately on drafting the first first version of these guidelines, and then we will consult the industry before we finalize that.
Okay. Having said that, the electrolyzers are the most essential component for the production of green hydrogen. If you talk about the cost, which is around $6 per kg nowadays across the country. So, what is the target under this mission? That how much cost you want to bring down by providing incentives to the companies?
Currently, electrolyzers are usually measured in a different way. The capacity of electrolyzers is usually measured by the electricity it takes in. So currently, the cost of electrolyzer is around $700 per kilowatt around the world. We expect that by 2030 and by indigenizing production in India and also developing indigenous technology, we expect the price, our cost to come down to about $400 or lower per kilowatt.
And moving on, DGCA has now swung into action and gone ahead and issued a show cause notice to Air India staff. This is after reports of an allegedly inebriated male passenger on board the airline's New York-Delhi flight had urinated on an elderly woman back in November. Now, DGCA has termed the conduct of the airline as unprofessional and has served notices to accountable manager, director in-flight services, as well as the entire crew. Now, in fact, shockingly, another mid-air urination incident had come into the fore, this time on a Paris-Delhi Air India flight. Now, my colleague Samir Dikshit is joining here with more details.
Yes, definitely. And the DGCA aviation regulator has taken the cognizance of the entire incident and has sought a detailed reply from the airline, Air India, into this incident. And what we are getting to know from the aviation regulator that the reply which Air India has sent, it prima facie, it seems so that the regulatory approvals were not followed by the airline. And this is the reason that the airline has issued, the regulator has issued a show cause notice to the director in-flight services of Air India. Show cause notice has also been issued to the accountable manager. And in addition to this, the show cause notice has also been issued to all the pilot and cabin crew members of the New York-Delhi flight. And they have been asked to give a detailed or an explanation that why the enforcement action should not be taken against them. And they have given a time period of 2 weeks. So they have to give their response within 2 weeks. And if the seems satisfactory, some more strict action that the regulator may take against the either the accountable manager or the director of flight services, cabin crew, or even the pilot. So, but it seems so that the response which Air India has given to DGCA. So DGCA has clearly mentioned that it seems so that the person in charge, they did not follow the regulatory compliances, they did not follow the rules to manage the unruly passenger on board the flight. So this is a very interesting note that has come in from DGCA, and now we have to see what sort of action or what sort of strong message DGCA will send in from here.
Well, at Times Network, we are always looking to create investor awareness and make financial matters simple for our viewers. Keeping up with our values, we present the second season of Nivesh Ke Fund. On this edition, we focus on the differences between direct equity investment and investing in mutual funds. Take a look at it.
Hello and welcome to another edition of Nivesh Ke Fund. You know, Avan, at times investors cannot decide whether they should invest directly in equities or invest via mutual funds.
Yes, Nikunj, that can happen. So today, let's talk about how they're different and, more importantly, which kind of investors they're suited for.
Let's start with direct equity. These are what we usually call shares. They allow an investor to own portion of the company, or they can be a part owner of a business.
Right. And mutual funds are vehicles to invest in different asset classes. Mutual funds invest in equities, bonds, government securities, or other fixed income assets based on what kind of a mutual fund it is.
So importantly, the difference is that in equities, the investor is deciding which shares to invest in, while in mutual funds, there is a fund manager, an expert who will take those decisions.
Right, and the manager, along with the research team of the mutual fund company, take informed decisions on where to invest the investor's money.
Before investing in mutual funds, an investor can decide the category of the mutual fund that they can also choose and that they are comfortable with, and the asset, the companies that the mutual fund is investing in.
For investors that are new to investing, mutual funds are an ideal way to start their investing journey, since the fund manager is constantly tracking their investments to help them get optimum returns.
Another benefit of investing in mutual fund is that an investor's money get invested across large number of securities, even when investing in a single mutual fund.
Yes, and that way the risk undertaken is relatively minimized as opposed to when you invest in the shares of a particular company or companies.
So I want to take this point a little further, Avan. So by investing in mutual funds, investor will get exposure to large number of securities, and the best part is that can be done at a very low investment amount.
Exactly, Nikunj. With as low as just 100 rupees, which is actually difficult to achieve when you're investing directly in equities.
Yes, another point of difference is to invest in equities, an investor needs to have a demat account.
True. And for mutual funds, the investor does not even need to open a demat account.
And so now you know the difference between investing directly in equities and investing via mutual fund.
Times Network, we are always looking to create investor awareness and make financial matters simple for our viewers. Now, keeping up with our values, we present the second season of Nivesh Ke Fund, and on this edition, we discuss the different kinds of risk involved in mutual fund investing. Do listen into it.
Welcome to another edition of Nivesh Ke Fund. Avan, you know, whenever we invest our hard-earned money, we always analyze the risk versus the return.
Absolutely. Every investment avenue has some risk involved. It's just about knowing the level of risk and whether one's actually comfortable with that.
So today, let's talk about the risks involved in mutual fund investing. While they do provide a plethora of assets to invest in, what are some of the key risks that mutual funds carry?
Well, firstly, it's important to note that mutual funds do not guarantee or assure returns. This is because some of the risks that they are subject to are market risks.
Equity mutual funds are investing in stock markets, and the markets are inherently volatile. So inadvertently, mutual funds also face the risk of being impacted by market turmoil.
Another risk is concentration risk. When most of an investor's portfolio is concentrated in a particular sector, if anything impacts that sector, it will adversely impact the investor's portfolio.
That's why it's very important to diversify one's financial portfolio and not have all of one's eggs in one basket.
Another important risk that mutual funds face is the interest rate risk. When interest rates increase, debt mutual funds usually get impacted negatively.
Then there is, of course, the liquidity risk. If, due to some reason, a financial asset is no longer easy to sell as before, it reduces liquidity of that particular asset and realization of fair price becomes less likely.
And further, there's also the credit risk, which is when the mutual fund scheme has invested in a fixed income security and there's a default by the borrower or a downgrade in its ratings.
These are some of the main risks associated with mutual funds. But we must always remember that the great investor Warren Buffett says about managing risks.
Yes, he famously did say that risk comes from not knowing what you're doing. So it's important to know all the risks and then invest.
That's all in this edition of Nivesh Ke Fund. See you next time.
You're watching Market Cafe. Let's quickly go across to my colleague Lisa, who's going to give you a lowdown of all the stocks that you need to watch out for in trade today. Over to you, Lisa.
Yes, good morning. Bajaj Finserv has updated on their unlisted subsidiary Bajaj Allianz General Insurance Company, where the GDPI for December month that declined by 9% month on month at 1,209 crore. However, on 9 months FY23 basis, that saw an increase of 11% month on month at 11,608 crore Y on Y. Rail Vikas Nigam has backed an order from Gujarat Metro Rail Corporation, and the project will be completed within 22 months. Now, this project includes designing, supply, installation, testing and commissioning of ballastless track for the Surat Metro Rail Project Phase 1. Next is on Force Motors. They have updated on the production and sales number for December month. The overall production that grew by 12% month on month at 2,326 units. The domestic sales, which represents around 80% of the sales mix, that saw an increase of 15% month on month, and exports saw a strong growth of 31% month on month. Mukand, which is a small cap company, they sold a land parcel of 47 acres in Thane for rupees 800 crore. Next is on Borosil Limited. The scheme proposed between Borosil Limited, Classpack and Borosil Technologies, that will be taken up for approval for creditors and shareholders today, that is on 6th Feb. And lastly, Keval Kiran Clothing, they have proudly announced its strategic partnership with the Board of Control for Cricket in India and the flagship brand, that is Killer, that will be displayed on the Team India's jersey. So these are the stocks that investors will keep on focus today.
Well, thank you, Lisa, for giving us details about all those stocks. But Bajaj Finance has one stock that would remain in focus, and this was after yesterday. The stock cracked more than 7% as the street was concerned about its slower growth and expensive valuation. But now, after the fall, is it time to look at the stock? Ashesha and Vinny joins us with the bull versus the bear case for Bajaj Finance.
Yeah, so first off, I'll start off with the points in favor of bull case scenario, and in that the most important thing is the guidance. Remember that at the end of Q2, management had guidance for AUM growth in the rate of 24 to 27% on a year-on-year basis. Apart from that, another important metric for lending business is the asset quality. Remember, asset quality for Bajaj Finance continues to remain strong, and at the end of Q2, management had guided for GNPAs in the range of 1.4 to 1.7%. Let's also talk about the triggers for the stock going forward. Analysts do believe that Bajaj Housing Finance could be the next trigger for the stock on the upside going forward. Another important metric is the return ratio, return on assets and return on equity in particular. At the end of Q2, management had guided for return on asset above 4% and return on equity greater than 20%. Let's also talk about some expansion plans of Bajaj Finance, where they continue to focus on rural expansion, especially in terms of new branch openings. And they also say that they will be venturing into platform and payments with large customer base to leverage upon. Apart from this, we will also talk about some other points in favor of bulls, where they say that cross-selling continues to remain strong for Bajaj Finance, and Bajaj Finance has conservative leverage standards because of the type of business they are into.
Absolutely, Ashesha. That's the bull case, but you know, you have a bear case coming in here as well. Let's not forget 6% QOQ growth in AUMs, what you were mentioning, what we are seeing right now in Q3. That growth is actually a slower growth and a softer growth that the company has seen coming in the last 10 years. So you have to keep that in mind as well. Plus, even when you look at the loan growth, you know, slowed despite the festival season that we've seen coming in. And obviously, QOQ growth was 6% in Q3 versus 7% in Q2. So that, you know, softness that we've seen coming in the last couple of quarters as well. Obviously, let's not forget, it's the most expensive NBFC, 6.4 times 12-month forward price to book ratio is what you are looking at. So obviously that expensive side is there to Bajaj Finance as well. New customer acquisitions is also happening at a slower pace for the company. So that is one factor that we should watch out for. So slower AUM growth, you know, slowest growth that we're seeing coming in terms of customer acquisition, as well as increased competition, especially and democratization for data. Democratization for data is something that we're keeping an eye out on as well. And Macquarie is actually maintaining a sell rating on the company, given a target price of 5,275 rupees per share as well. Bajaj Finance, obviously we saw a fall coming in the stock as well. As of now, it's at 6,100. Is it going to reach this 5,275 target, or will it go upwards is a thing that we're watching out for.
Ashesha and Vinny for giving us that bull versus bear case when it comes to Bajaj Finance. But moving on, in the oil and gas space, it will be GAIL that will also remain in focus, and this is largely on the back of the fact that in US the gas prices have been continuously falling. In fact, it is at a one-year low of around $3.7 per MMBTU. Now Henry Hub, which is the benchmark US gas price, has slumped to its one-year low, and from its recent peak, if you see, the prices are down nearly 60% and in December 2022 and so far in January, if you see, the prices have nearly fallen 50%. Now why this has fallen? Firstly, because of expectations of a warmer weather in January and February. Along with this, the drop in inventories was also smaller or lower than what the street was expecting, and along with this, if you see, the production has been picking up in the country, and the Freeport LNG, which was shut earlier, the restart of the same is expected to be delayed. Now how does it benefit GAIL? Now GAIL imports nearly 50% of its LNG volumes from the US market, and the prices of these volumes are linked to Henry Hub, which is the US benchmark. Now a drop in prices of Henry Hub also leads to lower gas sourcing or gas purchasing cost for GAIL. Now this drop, the recent drop that we have seen in Henry Hub, the gas sourcing cost for GAIL has come down by nearly 30%. As you can see in the chart, Henry Hub was around $7.8 in the second quarter of FY23, and this has now come down to $3.7. And because of this, the total gas cost or the gas sourcing cost for GAIL has come down from $13.7 per MMBTU to just $9 per MMBTU. And in fact, in front of this, if it tries to sell this gas in Asia, if you see the current gas prices are trading around $28 to $29. So it's a very good premium that GAIL would be getting by selling this US gas in Asia. So that's how it's going to benefit GAIL.
Well, thank you for that roundup, Somit. Now we have Vamakshi in the studio with all the morning brokerage notes. Vamakshi, take us through what the brokerages are saying.
Well, a very good morning to both of you all. Let's first look at the auto sector. We have a note that has come in from JP Morgan. Now, what they're highlighting is that we saw Nifty Auto outperform Nifty in the year 2022. Last year's outperformance was mainly driven by recovery in volumes, and it was the first outperformance in the last 4 years. Now, they're expecting earnings growth to continue. They also believe that the street is underestimating the discounts as well as cost inflation. As far as the preferred picks are concerned, TVS, M&M and Apollo Tyres make it to the list, while they're quite cautious on Maruti, Tata Motors and Escorts. The next stock on our radar is Jindal Stainless. We have a note coming in from Phillip Capital. Now, what they believe is that capacity augmentation is expected to strengthen their market leadership going ahead. New age applications are expected to drive volumes as well as margins, and they're also expecting debt to peak out in FY23, and they're heading for self-sustainability is what Phillip Capital believes. Apart from that, their group consolidation is also in progress. So considering all these positive factors, Phillip Capital has gone ahead and initiated coverage on this counter with a buy rating. They've also given a target price of 300 per share. And lastly, we will be focusing on the mid-cap space. We have the Indian mid-cap outlook for 2023 coming in from Jefferies. Now, they're recommending a bottom-up approach in small and the mid-cap space. Key themes like capex revival, housing and PLI are expected to grow. Most input commodities are also turning favorable. So in the mid-cap space, if we look at it, the top picks are the first one being Polycap. Solid execution despite softening copper is working out for the company. Kajaria Ceramics, focus on exports by Morbi, is expected to aid domestic demand going ahead, and Crompton Greaves Consumer is also one of their top picks, as they're seeing healthy margins in the core business. So these are all the important brokerages that you should watch out for in the trading session today.
Well, thank you, Amakshi, for giving us all those details. Moving on. Now, market is expected to remain flat largely in the calendar year 2023 as per analysts, but there are many stocks that have been giving a strong and consistent dividend returns to consumers, to shareholders, and in fact expected to do so even going forward. So which are the stocks in both PSU and the private space? Sharad joins us to give us all those details.
Well, yes, current scenario makes a school of thought coming in for the dividend yield play stocks, and do remember there are PSUs, there are REITs, there are MNC stocks which are a dividend theme stocks, and they are generally played out when there is an inflation kind of a scenario happening, and there are certain companies as per the IDBI capital report such as Engineers India, AkzoNobel and even Sanofi India, where the current payout is more than the actual dividend yield. But let's look which are the stocks in the PSU segment where we are seeing a very strong dividend yield coming, and the usual names include NMDC, REC, GAIL, Hudco, and a surprisingly Coal India, where the dividend yield ranges between 9 to 12%. Now, even if you see the 5-year average ROE numbers, they also range for these stocks between 12 to 20%, but Coal India having a land share of that, almost 49% 5-year average ROE numbers. Now let's look at the private companies in the dividend play theme, and over here we are having Philip Carbon, now it's called PCBL, followed by Polyplex in the packaging segment, Oracle Financial Services, Indus Tires and ITC and Swaraj Engines, where the dividend yield ranges between 5 to 8%. Now do remember, one more important thing is government's divestment proceeds. Over here they include the dividend received as well, and they total almost around 62,000 crore rupees, and that's an important play for the dividend in the PSU space as well.
Well, thank you for the details, Sharad. Now with that, we're completely out of time on this show. You don't go anywhere. There's lots more action coming up on the market. Thank you so much for tuning in.